I want you to stop for a moment. Close your eyes if you need to. Think about the last time you lost money in the market. What was your first thought? Be honest. Was it the market manipulated that move? Was it my broker hunted my stop loss? Was it that news came out of nowhere? Was it the big players pushed price down just to take out retail traders like me? If any of those thoughts felt familiar, this video is for you. Because I am about to tell you something that is going to be uncomfortable to hear, something that most trading educators will never say because they do not want to lose your attention. You are not losing because of the market. You are losing because of you. And until you accept that, completely honestly, without excuses, nothing will ever change. I know that is hard to hear. I know you came here looking for a better entry technique or a smarter way to read the chart. I know part of you is already looking for reasons to disagree with what I just said, but stay with me, because on the other side of this uncomfortable truth is the only real path forward. Let me tell you about a pattern that Mark Douglas observed over decades of working with traders. He worked with beginners. He worked with experienced traders. He worked with people who had been in the markets for 20 years and were still struggling. And across all of them, across every skill level, every strategy, every market, he found the same thing. The traders who were losing shared one common belief. They believed the problem was outside of them. The market was too unpredictable. The setup did not work this time. The volatility was unusual. The news was unexpected. The big banks were manipulating price. Always something external. Always something outside their control. Always something other than themselves. And the traders who were winning, the consistent ones, the ones who were still standing after 5 and 10 years, they shared a completely different belief. They believed that everything important about their trading was inside their control. Not the market, not the news. Not what other traders were doing, their own decisions, their own execution, their own response to whatever the market gave them. That difference in belief, that single shift in perspective, was the biggest dividing line between the traders who made it and the traders who did not. Let me show you what blaming the market actually costs you. Every time you say the market was manipulated, you are telling yourself that you had no chance, that it was not your fault, that there was nothing you could have done differently. And that feels good in the moment. It protects your ego. It removes the discomfort of looking at yourself honestly. But here is what it also does. It removes your power. If the market is the problem, if external forces are responsible for your losses, then there is nothing you can do. You are a victim. You are at the mercy of forces beyond your control, and victims do not improve. Victims just keep losing and keep finding better explanations for why it is not their fault. But if you are the problem, if your decisions, your emotions, your execution are responsible for your results, then everything changes. Because you can change your decisions, you can manage your emotions, you can improve your execution. You have power, real power, the power to actually get better. That is what Mark Douglas was pointing at his entire career. He was not trying to make traders feel bad about themselves. He was trying to give them back their power by showing them where the real problem actually lived. Now let me get specific. Because I do not want this to just be a motivational talk. I want you to see exactly how this shows up in your trading. Here's the first way you are losing because of you. You do not have a written plan, and you trade anyway. I do not mean you have a general idea of what you are looking for. I mean a specific written, detailed plan. Entry conditions, stop loss placement, target, position size, the exact conditions under which you will exit early. The exact conditions under which you will stay in. Most traders do not have this. They have a vague mental picture of what a good trade looks like. And then they make decisions in real time, while money is on the line, while emotions are running, while the market is moving. That is not trading. That is improvising with your money. And the market punishes improvisation every single time. When you do not have a plan, you are making decisions based on how you feel in the moment. And how you feel in the moment is always distorted by fear and greed. Always. Mark Douglas said, if you do not have a plan before you enter, you will make up the plan as you go. And a plan made under emotional pressure is never a good plan. This is not the market's fault. This is your fault. And it is completely fixable. Here is the second way you are losing because of you. You know your rules, and you break them anyway. This is the one that really stings. Because most struggling traders actually know what they are supposed to do. They know they should not move their stop loss. They know they should not add to a losing position. They know they should not trade when they are angry or frustrated or desperate to recover losses. They know all of this, and they do it anyway. Why? Because knowledge without emotional discipline is worthless in trading. You can read every book Mark Douglas ever wrote. You can understand every principle of trading psychology. And still, when you are sitting there watching your position go against you, watching that number get smaller and smaller, everything you know disappears. And you act on fear. This is not a knowledge problem. This is an execution problem. And the gap between knowing and doing, that gap is where most traders live, permanently, for years, knowing what they should do and doing something else in the moment. The market did not create that gap. You did. And only you can close it. Here is the third way you are losing because of you. You treat every loss like a personal attack. When a trade goes against you, what happens inside you? For most traders, a loss triggers something emotional, frustration, anger, a burning need to get the money back immediately, a feeling of being personally wronged by the market. And from that emotional state, from that place of frustration and urgency, they place another trade. Not because the setup is there, not because their system gave a signal, but because they need to recover right now. And that trade almost always makes things worse. Mark Douglas talked about this constantly. He said, the market is not doing anything to you. The market does not know you exist. A loss is not the market punishing you. A loss is just the cost of doing business in a probabilistic environment. But when you take it personally, when every loss feels like a personal failure, you enter a state where rational decision-making becomes almost impossible. You stop following your rules. You start chasing. You start gambling. And the account that took months to build can disappear in an afternoon. This is not the market's fault. This is your relationship with losing. And it is completely within your power to change it. Here is the fourth way you are losing because of you. You are trading a size that is too large for your emotional threshold. I talked about this in another video, but it is so important that I will say it again here. When your position size is too large, when the dollar amount you are risking is more than your nervous system can handle calmly, you cannot trade well. Period. It does not matter how good your strategy is. It does not matter how much you know about technical analysis. When the risk is too high, fear takes over, and fear overrides everything else. You move your stop because the loss feels unbearable. You exit winners early because the profit feels fragile. You freeze on valid entries because the risk feels too real. And then you blame the market for giving you a bad entry. You blame the market for stopping you out. You blame the market for the trade that ran without you. But the market did not do any of that. Your position size did. Your inability to stay calm under that level of risk did. Trade smaller. Risk 1% or less per trade. Get yourself into a position where the outcome of any single trade genuinely does not matter to you. Where you can breathe. Where you can think clearly. Where you can follow your rules. That is not giving up. That is taking control of the only thing you can actually control, your own emotional state. Now I want to address something directly. Maybe you are thinking, okay, some of this is on me. But some of it really is the market. Sometimes the market really does do unpredictable things. Sometimes news really does come out of nowhere. Sometimes a perfectly valid setup really does fail for no reason, and you are right. The market is uncertain. It is probabilistic. No setup works 100% of the time. Unexpected things happen. Stops get hit. Trades fail. That is real. I am not denying that. But here is the distinction that Mark Douglas made, and it is a critical one. You cannot control which trades win and which trades lose. That is the market's domain. That is probability. That is outside your control. But you can control how much you risk on each trade. You can control whether you have a plan before you enter. You can control whether you follow your rules when the trade goes against you. You can control your position size. You can control your emotional response. You can control whether you trade when you are frustrated or whether you step away. These things, these are your domain, and they account for the vast majority of your results. Most traders spend all their energy trying to predict what the market will do, which is the one thing they cannot control. And they spend almost no energy on what they can control. Their own process, their own execution, their own mind. Flip that. Spend 90% of your energy on what you control. Accept that the market will do what it does. Going to focus on executing your process as cleanly as possible every single trade. That is where the real work is. Let me leave you with this. There was a trader Mark Douglas described, someone who had been trading for years, losing consistently, always finding an external reason for every loss. The market was wrong, the setup was fine, but the conditions were unusual, the timing was off, and then something shifted. This trader started keeping a journal, not of trades, of decisions. Every time they broke a rule, they wrote it down. Every time they moved to stop, they wrote it down. Every time they exited early or held too long or increased size out of frustration, they wrote it down. After 30 days, the pattern was undeniable. The losses were not coming from the market. They were coming from a handful of repeated emotional decisions. The same mistakes, over and over, in different markets, on different setups, on different days. The market was not the problem. The decisions were the problem. And once this trader saw that clearly, once they could not hide from it anymore, they started to slowly, imperfectly, but consistently. That is the only path forward. Stop looking at the market as the enemy. The market is just a mirror. It reflects your decisions back to you in the form of profit and loss. If you do not like what you see in the mirror, do not blame the mirror. Change what is standing in front of it. You are not losing because of the market. You are losing because of decisions you are making that you have the power to change. That is not bad news. That is the best news possible, because it means the solution is in your hands. If this video made you stop and think, if something I said made you look at your trading differently, hit that like button right now. Subscribe, because every video on this channel is built around one idea, that the real work of trading is internal, and that the traders who do that work are the ones who survive. Drop a comment below. Tell me honestly, what is the one thing you know you should be doing in your trading that you are not doing right now? I read every single comment, every one. See you in the next video.